If you're an investor with a time horizon of 20 years or longer like I do, it's not a matter of if you'll see a stock market crash, but when. However, how can long-term investors prepare for crashes? Everyone knows that you can't time the markets. If I sell everything because I think we're near a top, and then the market rallies 5, 10, 20% or more, I'm going to miss out on all of those gains. But if I'm totally invested and the stock market crashes 20, 30, 40, 50% or more, I'll miss out on all of those buying opportunities. Allow me to introduce my strategy that I call always wrong investing. I started trading and investing in the stock market back in 1998. And back then, I thought you had to be right. Makes sense, doesn't it? Investors should have a thesis, put their money where their mouth is, and then if they're right, make money. But here's the thing. Over my more than 25 years investing, I've discovered that while I'm really good at picking excellent companies for long-term investments, I'm downright awful at timing. Whether you're a trader or an investor, you get 30 to 40 years to prepare for your retirement. And that's great. It's a lot of time, and you can make mistakes and then fix those mistakes over time. However, we only get one 30 to 40 year time horizon. If I want to retire one day, that quite literally means I cannot fail. I can make mistakes, but I cannot fail at this if I want to retire. I learned that this meant I needed to stop trying to be right. Instead of making a prediction and going all in or getting all out, I make small moves. I buy in stages and I sell in stages over time. Instead of selling all of my positions, I trim small amounts. By freeing up this capital, I'm able to put it back to work when the market does pull back. And trust me, when you have a time horizon of 20 years or more, you will see stock market crashes. You will experience black swan events, and you will see the impossible happen. As long-term investors, we can't limit ourselves to thinking in probabilities. We have to think in terms of possibilities. It doesn't matter whether something is likely to happen. Ask any investor who owned General Motors stock before June 2009. General Motors, the venerable institution that's been around for more than 100 years, declared bankruptcy. Any of those investors who assumed that could never happen had their equity zeroed out. That's right, they lost everything. My approach to investing is that I'm always wrong. This means I had to figure out a way where I could succeed regardless of whether or not I was right or wrong. I cannot afford to be wrong. If I want to retire, I simply cannot afford to fail. Therefore, I can't afford to try to be right. I make a plan for both directions. What am I going to do if stocks go up tomorrow? And what am I going to do if stocks go down tomorrow? I started Get Irked 5 years ago to teach people how to invest for free. I believe everyone should be able to invest and not have to pay some schmuck for an investing course which may or may not work. If you appreciate what I do, please give me a like and consider subscribing. And more importantly, consider sharing this video with somebody you care about.